Hi, folks. It's Adrian Zdunchik, CMT Charter Market Ignition. And this is a brand new webinar, brand new Friday, brand new webinar to give you guys a little bit of an update to what key levels are we supposed to watch on Bitcoin and other markets. We're going to review with the intermarket technical analysis scope of information. Since Bitcoin is not trading in vacuum, what's happening in Bitcoin is dependent and cross-related with the traditional finance that is also approaching the strategically and historically weaker period in the quarter three, with the S&P entering the worst 6 months and then the Nasdaq starting the worst 4 months. And Bitcoin is glued to Nasdaq. So we're gonna see what the trends are showing, what the numbers are showing, and see what we can do on that front. And please let me know if you have any questions in the comments section. I'm gonna check and keep refreshing the chat. And well, otherwise, let's go. To start off with that particular stock charts website, and the typical industrial Dow Jones Industrial set 39,000 points right here, where ultimately we are talking about the 39,000 points, 39,120. There is not much change over the last couple of months ultimately for the Dow Jones. As you can tell, there's been an overall sideways orientation for the price types of for the price movements. There's not been much going on ultimately. Yes, and the Dow Jones is exactly where it was last month, where it was in March. Sideways price action tends to prevail another day, and regardless we like it or not, that seems to be the actual case. By the way, let me check real quick. We're gonna stop sharing the screen this way, and instead we're gonna have the proper setup right over here. This one should be much better. The S&P is far stronger. See how much stronger it is actually, right? When compared with the Dow Jones Industrials. That's exactly what we're talking about. Like the S&P compared the tilt, the angle, the slope of the moving averages, the 50-day in the blue curve, the 20-day in the green curve, and 200-day in the red curve right there. Ultimately, compared with the Dow Jones, right, which both of the trends are flat and only 200-day, it's kind of like curling up right there on the right-hand side at the bottom of the screen. The S&P right there is well, it's far stronger. It's made somewhat of a base out of the previous region of weakness, right? It's kind of like flipped that region into positive thing, into bounce area that actually led us higher, right? 5400 seems to be the actual 20-day support, approximately 3350, if you will, or actually 5375. It's somewhere in between. Still, it actually collides nicely with this rounding gap, with this midway gap, if you will. Quite a strong breakout on a breakout day. Local consolidation, push over at 5500. Very powerful setup for the S&P, and the trend is accelerating. See how this divergence, actually this position of a 20-day trend against the 50-day trend are moving. That definitely is a stronger tendency than it is for the Dow Jones, and that needs to be considered. With the energy sector, kind of like trimming significantly from 98.99 all the way down to 88, quite a significant push by 10% or more, by 11% or so. Arguably, we are not necessarily, I would say, overly optimistic or bullish on the energy side. That the 200-day trend has flattened out. The 50-day trend is curving down. The 20-day trend has crossed over in the bearish fashion. And we are definitely in the medium-term correction, this medium-term channel. I wouldn't call this anything bullish in the short term or anything bullish in the medium term. It seems, and the long-term trend is changing. The long-term trend is flattening out. So is that really the actual case of the energy just changing the shifts and shifting the tide in the market? well, we're gonna see. We're gonna see about that. Although, please do let me know real quick if you can hear me fine, if you can see me fine. Uh, Hi, right there, Tommy. Good to see you. Please let me know if there is um, all the clarity on your end, and if so, then we definitely are going to proceed because there are a lot of interesting points outside of Bitcoin that actually translate to how Bitcoin performs, and it all often connects. Mm, So if we are Vivian, good to see you. Thank you so much. Here and see fine. So that's how we go. That's how we move on. With the energy sector ultimately being very important because typically where the strong risk on assets do worse on a relative basis during the quarter three, which is slower, more quieter, more silent. The typically more call it uh, bearish oriented stocks that kind of like economically difficult stocks tend to perform better, right? Such as healthcare, such as utilities, consumer staples, energy sector, because stock market on the risk side does worse. We tend to skew and just go deeper on the assets that pay out the high dividends. Those are the low dividends, but that they are more stable, more stability. So we choose the things that we need over the things that we actually want. And the energy, we need energy, right? We need energy. We need energy to power our devices, to power our houses. And that's without the energy, we cannot necessarily survive much, such as similar like as with the food and hygiene products. So the energy is doing worse, which overall, is a positive change in favor of the risk assets. However, there's this beautiful bounce lately as of 87 points for the XLE based on the 200-day moving average. And see how beautiful the bounce was, right? Right there, there was a little bit of some sort of like a rising wedge pattern of a bearish flag, bearish pennant, if you will, pennant, bearish flag. And it was continuing right there until the actual slope of the 50-day trend and the 20-day trend was broken, and then it kind of like dipped lower to the perfectly timed and managed 200-day support. Quite classical technical analysis right there. And the 30-year bond prices breaking out and stabilizing over the 200-day moving average that is flattening out after a very long series of fall ever since 2022. Brought us the bear market and the Russian-Ukraine war right there with the TNX kind of like stalling, much more often right now with the 20-day, 50-day trend and 20-day trend kind of like curving down. Signs of weakness on the yields, on the interest rates. So there seems to be an overall inflection pending. It's not yet confirmed. However, we are slowing. The expectations are slowing. The expectations are tilting more towards the downside from the investors. So that's a good thing. The gold is up 0.94% today, with still kind of like this rectangle, this box type of a pattern range coming up. As long as we continue to move inside of this, there's not much conclusive price action. We're gonna mostly just chop around, the highs and the lows. There's nothing constructive in it. However, what's constructive is that 200-day trend is rising, and that's the primary bull market as a predominant tendency of the market to go up. It's a little bit weaker on the silver. However, there's still very strong 425% push today with a breakout and a recovery above the 20-day trend. After this period of a local slowdown, there's sort of like a bullish flag type of a pattern correction, right? Decent support. Again, moving averages tend to act as support and resistance levels. Quite often something to keep in mind. Bitcoin is about to break lower with the 50-day trend being crossed over by the 20-day trend. So the 20-day trend is setting up more to the downside right now. However, we still are moving. See how strongly and sharply we're moving on a 200-day basis with the 57,500 as a long-term support for Bitcoin. So in case we actually dip, towards those regions lower than 60,000, we may see and expect and anticipate the support in the previous area of strength So anywhere between $57,000 may actually bring this local relief. Otherwise, new all-time highs is there, consolidation is there. Typically, slower quarter three is common. So I wouldn't be surprised if we actually give another shot at the nosedive, towards 57,500. But if it does so, that might be literally one of the last opportunities probably to load up before higher numbers, because if the 74K is the new all-time high, and then the local valuation methods that I was talking about at the Cointelegraph Spaces like a couple of months ago, the MVRV is basically right there at the historically quite low values at 2.03. While the historical reversals came in where the MVRV, the market cap, realized cap, basically this ratio of how bloated the market is with the profit was above 7. I would say we have quite a way to go, right? Quite a way to go, at least above 5 to give us a warning sign. However, at least double is what we should do in order to consider any peaking. Double from 67 is anywhere close to $130,000. So we'll see. We'll see if we go there. Well, let's take a look at a Bitcoin, right? How it all connects. Because ultimately, like I said, there is correlation. This correlation is at 0.28 right now. 0.28 means that there is a weak, sort of like a weak correlation on the 7-week basis between the S&P and the S&P and on the 7-week basis with Bitcoin, right? So Bitcoin against S&P is about 0.27. So you can call it about 27% of the price action is similar, is aligned, is moving in the same direction, right? What quite often at all, we tend to stay in the upper region of that, right? With the peaks, with the actual, negative dips, the deep extremes, we tend to quite often bring the actual reversals to the market, right? So quite a few times, the moment that we actually, tiptoe right there at the bottom, right? We were observing those peak regions actually, right? Here, the peak bearish selling pressure regions, right? So the lows, another low was here, another low was here, boom, right? Another low. Quite often, that's arguable, but quite often it seems that we tend to reverse to the upside whenever the correlation goes to the negative side, and whenever it actually peaks on an inverse mode, right? So it peaks to the downside right here. So it dips, it crashes, it goes to the fairly extreme negative levels. However, that seems to be the case, right? So if we take that into consideration, we may actually see and expect that if the correlation dips in nosedives, this is where the potential peak of the bearish supply selling pressure may come in, and on the other side, the buyers may step in as well. So quite a lot of reasons, like I said, to anticipate 57,000. However, if we ever lose 57,000, the almost yearly support, 50-week support, not 52-week, but 50-week support seems at 46,000, and 200-week support and 36,000. Except for like flash crashes and types of the COVID crash, like things that are like black swans by definition unpredictable. Unless something like that happens, I don't know, Martians attack the planet every there's a gigantic global chaos and the global energy outage. Who knows? Unless things like that happen, things that we cannot predict happen, 57 might be the long-term region of support attractive enough to bring us into the fairly higher regions. Like I said, 2x from here seems more than probable, at least by the historical numbers, by the MVRV valuation model at least. And technically speaking, getting a little bit more tactical side and view, 57, like I said, 275, maybe a little bit higher, 57 to 3 approximately seems to be the support given by the 200-day moving average. And if that is the case, this is the long-term trend. This long-term trend gives you a rough estimate of what the fair quote-unquote value of price of Bitcoin is. And this fair price of Bitcoin, normalized price of Bitcoin, normal price of Bitcoin standard is 57,300 approximately. So in case we actually lose this stability over here, I would expect us to dip towards 57,000. Although, like I said, we are still moving in this overall bullish type of a consolidation in the long term, right? Because we freshly made the all-time highs, the bull market is thriving, and we're just consolidating into typically slower periods. So there's not much surprise, I would say. The things are not bullish, that's for sure, in the short term, in the medium term. And that can be seen not because I say so, but because the RSI, which is this curve, this curl up curve, and the 50-day RSI are actually, well, falling or flat, right? The 50-day RSI, this black curve, the smooth and black curve is actually the 50-day trend, 50-day momentum, while the RSI is actually presented right here at the level of 34 points. So we're definitely oscillating the lower end of momentum. When there's not much momentum in the market, well, guess what? The market continues to, most of the time, consolidate, move sideways, or definitely not move to the upside, because when the move is relatively strong to the upside, the momentum tends to be located in the upper half of the indicator. While the ITR, the volatility index, the volatility average true range, is actually lower as well. We've been dipping since mid-March, right? Since mid-March, and we had dipped quite significantly by 52%. So we are 50% less volatile than we were 3 months ago, actually, right? And if that is the case, then trends do not have enough of fertile ground or enough of, excitement from the traders to go and push further beyond the current range boundaries, which promotes on a falling ATR tendency, both on the 50-day trend and the regular ATR. It encourages more consolidation in the market. So there's not much fireworks in the charts yet. The 200-day B Pro trend line, which is this one, it kind of like historically brought us decent reversals, especially when it was rising strongly. And ever since, I would say, this has been quite a good indicator of what the fair price of Bitcoin on a more recently biased basis was, right? So even though there were many more breaches, of this 200-day trend line, it was actually pointing more recent, more accurate recent average price of Bitcoin by a 200-day basis. And this is our custom indicator. So on a custom basis, it seems that the actual average price of Bitcoin is at 64,400, and we are below it. We're $1,000, almost $1,000 below the average fair price on a recent basis of Bitcoin, right? So what it tells me is that between the zone of 57,000, which was this 200-day moving average, and at 64,000, we have an area and a pocket of air potentially accumulating the buyers, right? So I would expect, there is a reason to expect why traders would anticipate the potential buying orders being placed between the region of $56,000, $57,000 and a 64,000, right? So on a 200-day recent skewed databases, we are already in the undervalued zone. However, this undervalued zone may stretch as low as 57,000, and if that is the case, well, arguably anything over here might be considered a potentially good buying opportunity on the long term, right? On the long term, I'm not saying short term. I'm not saying it cannot go any deeper. In fact, it would make sense to expect that it may dip, even if it dips, towards 57,000. It seems, to kind of like bring a little bit more equilibrium to the range lows area, right there. Even if that is the case, I would still consider that as a good buying opportunity. Now, especially even better, strongly better buying opportunity towards the bottom side of the region of the range rather than now, right? So if I were to buy more Bitcoin, I had already accumulated a lot of Bitcoin for the long term, and that is part of my buy and hold strategy, which means that I'm not planning to sell this until the next year, the half of the next year, or the second quarter of the next year. And it's just resting. And what I'm doing is when the dip opportunity comes up, the buy the fucking dip opportunity comes up, and it's not based on my guess, but it's based on technical analysis, the numbers, the history. then there is a good reason to anticipate that that might be a considerable buying opportunity, right? At around 50, like I said, below 64 and above 57, that might be the support pocket. And if that is the case, the closer we get to the 57, the more encouraged, the more inclined myself and many other traders can feel and be to put in and print in their buy orders. Otherwise, the midterm setup for my trading for my spot trading strategy on the Bear Regular Pro and a high time frame trailer and the current time frame trailer is bearish on both sides. High time frame stop is 68.754, so 68.7, 68.8, and 67. Right, this is the region of a resistance. So anything that's happening basically between 67 and 68, 754. That's a no place, no game for me. Right. So if I were to buy anything, Bitcoin into that region, I would consider strongly waiting through and waiting out. Otherwise, my system is in cash right now, so I'm not actively trading that because it's cashed. It was stopped out of this bear signal after breaking the 67. 200 it was 67, sorry, 67,000, 67,037 if I remember correctly. That brought the actual reversal signal for this otherwise choppy sideways range. So in range, in the sideways type of a movement, there are a lot of backs and forths, the bulls and bears, the buys and sells, signals that are not really constructive because they are contributing to the sideways mirror. So the fact that it's just getting stopped quite often contributes and confirms that we're talking about a stabilization of Bitcoin rather than a short-term thrust and push, right? So quarter-free typically is slower, so I would also expect a little bit less price action right in that region. Otherwise, the fear and greed index, indicates that we actually are talking about the level of 60, right? We are still overly positive, over positive, and generally positive on what's happening in the market, which is quite interesting to observe. The NUPL right there, if we put it, no, okay, so let's put it the NUPL here, shall we? Or the NUPL here, net unrealized profit and loss. Net unrealized profit and loss is at 54%, which tells you that the market, the net unrealized profit is at 54%, or the 54%, 53% approximately of the market is in profit, right? So it's a little bit 50-50. It doesn't give you much of euphoria, much of very aggressive regions where historically Bitcoin peaked, like I said, at 78%, 73%, 83%, 82%, right? 86%. So those are the levels that kind of like bring you to extremes. And strong belief comes up whenever we actually go from 0.5, towards 0.75, and we are currently approximately 53% of the market is in profit. So definitely far from any peaking region right now, even though we are trading very highly and very high at all. Boom, quite a dip on the Bitcoin average mining cost, which is interesting. Pretty curious if that is the actual data, that there's some error. But 43,000, that would be pretty cool. That would mean that the miners are in positive, right? The miners are in profit. 45,000 versus 64,000. So that would mean over 50% profit for the miners. That would be quite a dip on the average mining costs. So not sure how reliable or credible that is, because just a couple of days earlier we were actually at the point where the mining cost at $90,000 or more. So we are definitely far lower. We'll see what it gets us, but as long as this tendency is maintained and the miners are in profit, less selling pressure expected, now mining is getting more profitable, and that would be the case to maintain a bullish thesis right there. Otherwise, Season X, as we can tell, the Season X is going to tell you basically on the seasonality of the markets, and the seasonality of the markets encourages Encourages, well, we are 21st of June until the end of June. Basically, typically over the last 14 years, we tend to observe minus 2.52% average return with the median return of 0.42% on negative, 46% winning trades, so 54% losing trades. So most of the trades were lost, although the 2013 was the significant major drawdown. In 2013 was a max drop of 19%, sorry, 19%, almost 20% crash that happened in June, right? So not much positive overall. 2.5% negative. So the expectation of the last 14 years seems negative. I wouldn't necessarily override it, over expected. So it's fair to assume that the remaining side of June is not the strongest one. So if we are to lose, let's say, 2.5% from where we are right now historically, this is literally going to take us to 62,000. So perhaps that aligns, that shows us the target, paves the way for the target, what to expect. The block kind of like check on the cumulative volume ETF spot for 302 billion, so $302 billion generated and gathered by the cumulative spot Bitcoin ETF right there. With the net flow of minus $152 million, with IBIT, the iShares by the BlackRock, basically 19.71 billion AUM, 18.02 billion AUM for Grayscale, right there for the Fidelity, BTC 11 billion. So quite an advantage, almost to double on the BlackRock iShares right there. Market dominated by 88% by the spot, 12% approximately by the futures. So not many, definitely 9-to-1 ratio on betting. The spot versus the speculation. The institutions are seeking stability and holding as a buy and hold type of an asset for Bitcoin at least over the next year, it seems, rather than short-term speculations. So yeah, this is what's looking fairly nice. Otherwise, the most important point is that we continue to move within regular volatility frames of Bitcoin. It's slowly bleeding. There's nothing extravagant, there's nothing nonchalant, there's nothing crazy on the short-term technical side. This is a 4-hour chart with the momentum bands giving you the upper region of resistance and support, basically. Right, so 63,500 and 66,700, 67,300, those are the levels basically to watch and to observe. That may be considered the support region, 63,500, 67,3 as the area of resistance. Anything in between, basically, right? Anything in between those lines is where the biggest congestion of the price action should be. So until we see a major breach to the downside or to the upside, we can expect Bitcoin to kind of like chop around and oscillate in between those rates, between 63,500 and between 67,300. And as long as that's the case, like I said, there is not much conclusion, there is not much solution, there is not much resolution, there is not much definitive vote by the market, which is slowly bouncing more or less sideways, right? It's moving a little bit up, then a little bit down, then a little bit up, and a little bit down. That's exactly what defines a sideways type of a movement. So 63,500, 66,700, 67,300. Those are the levels for short term, and as long as we continue to move within them, Bitcoin is not breaking out. It's not changing anything in particular, and this is what I think is exactly the right moment to answer one or two of your questions. And JC, what are the realistic odds that the bull market rally really is over? 0% odds. The trends are upwards oriented. The fundamental valuations are very low, 2.03 versus 7 historically being. So at least 3.5x, at least 350% growth can be expected by the fundamental valuation. Will that happen? I have no idea, right? However, we are definitely far from any overvaluation for Bitcoin and UPL only 52% of the market profitable, while 75% has indicated historically area of extremes and warnings. Far from any overvaluation, it seems, for Bitcoin, right? Very good question, though. Very good question, JC. Willius says, GM to you back, Adrian. Adrian, all clear. Yeah, Vivian, and I do appreciate your coming to the show. I know there is a very big event going on with the Polish national team playing against Austria. So all the good luck to Austria. Most likely we're gonna lose anyway. So that's the reality. So all the shout out to the Polish community, all the shout out to you guys who are watching that and listening to our show, to this webinar. Key levels were broken down, the valuation was broken down, technical charts were broken down with the key levels, key supports. What can I say? Overall, we are approaching the short-term undervalued region for Bitcoin. 57.64 is the region where there's a lot of rationale to expect the market to turn around, to be flooded with bids. If we get lower, that's a dream come true. I would buy the fuck out of that if it actually comes. That might be probably the last buying opportunity in the quarter three, because while quarter three tends to get slower and overall negative, the quarter four average is 50% return on the purchases over the last 14 years. So very strong positive tide and skew towards the end of the year. The market is nowhere near pumped out. There's nowhere near bloated. It's actually decently undervalued. It's starting to be decently undervalued. Let's see where that goes, right? Take it easy for quarter three. Enjoy the fun quarter four, quarter one next year, and we're going to make it just fine. Otherwise, I appreciate you tuning in. God bless you all. See you around, and that's a good